Welcome everyone to today's Spaces. I'm Pete Humiston, Head of Research at DeFi Development Corp, and thanks for joining us today. Today's Spaces is going to be our monthly business recap in AMA, where we're going to be covering all that went down last month, where we made progress, touch on what's ahead, and answer some of the questions we received from investors and market participants. Joining me are members of the DFDV management team. We've got Joseph and Parker here. They'll be the ones driving, answering some of the questions, sharing thoughts. Of course, if you have any questions, please post them under our pinned tweet on our profile. We'll do our best to get to all of them. And of course, this Spaces will also be recorded and available for playback. Before we begin, a quick note, today's discussion may include forward-looking statements. These involve risks and uncertainties that could cause actual results to differ materially from those projected. For a fuller discussion of these risks, please refer to our most recent SEC filings, including our Form 8K related to the financing. We don't undertake any obligations to update these forward-looking statements. Cool. Before jumping in, I did want to just give a quick high-level September recap of just, what were some of the more notable things that DFDV was able to achieve last month. Of course, there is probably more to unpack here, but just at a high level, from a treasury growth standpoint, we acquired nearly an additional extra 200,000 SOL. So that brought us to surpass 2 million in SOL for our corporate treasury. We also announced Solid Investor Day, also known as the Solana Investor Day, which is basically, a partnership with ecosystem leaders. We're going to be running an actual in-person event in November in New York City. The purpose here will really be dedicated to institutional investors and analysts and market participants who want to gain a deeper understanding of the investment case for Solana and just get a better understanding of how the ecosystem operates and works. So we're super excited for that in early November in New York. We also announced, one of the more notable partnership announcements that I liked. We had teamed up with AllDomains to launch the DFDV domains. So this is basically a new way for shareholders and community members to further align their online identity with DFDV by purchasing a .dfdv wallet domain. We also made some meaningful progress on the Treasury accelerator front. We announced a deal with ZeroStack, as well as Fragmetric Labs to launch DFDV Korea. Again, this is part of our broader push in the Treasury accelerator front. On the leadership side of things, DFDV's very own Dan Kang was promoted to Chief Strategy Officer. On the capital markets front, our board authorized a 100 million share repurchase program. And then last but not least, on the content side of things, we published 2 pieces to our blog, which you can check out anytime, dfdv.com/blog. The first piece, entitled DATS, the next frontier of crypto exposure, was a piece where we discuss how DATS create value, their business model, the underlying risks, why premiums matter, and why Solana DATS could lead the next leg higher. The other piece that we published, entitled The Next Best Crypto Trade, Solana DATS, was a piece that we published where we dive into why we believe Solana-focused DATS are positioned to dominate going forward and how investors can separate the winners from the pretenders. So highly encourage folks to head on over there and check out both pieces on our blog. And of course, subscribe for all future updates and industry insights as well. All right. With that said, we can move into the questions part of the Spaces here. Just real quick before we begin, Parker, Joseph, you guys good? Mic's working. You can hear me? Feeling dangerous?
Ooh, I'm feeling real dangerous.
I think Joseph actually lost speaking permission, so I just granted him. Cool. We'll move into the first question here. So just on the Treasury accelerator front, given, for example, DFDV Korea How do we think about the upsides of helping launch various different DATs in different parts of the world? Parker, Joseph, one of you guys want to take that?
Yeah, you got it, Parker.
Cool. Yeah, so a couple components here. I guess the two main components. One is launching Solana Treasury vehicles in other countries. And so the real power here is, the local marketing, right? So we actually have a lot of people, we have people from all over the world trading our stock. I'm sure many of you are not based in the US here. But we're not really able to cater to, especially non-English speaking audiences. And so we think that a Solana vehicle following a similar playbook, using this, similar website, similar levels of transparency, similar on-chain activities, similar, everything, but with the local flavor, we think could do a lot better than the US vehicle in each of those markets. And then additionally, there are in some cases tax considerations where investors investing in local vehicles have preferential tax treatment versus investing in foreign vehicles overseas. And so if we can help launch, say, DFDV Korea or DFDV UK, or there's a couple others that we'll be announcing very soon here, if we can help launch these, then we think it strengthens the global brand overall so that everyone all around the world is seeing the bridge logo and the orange and blue and hearing the message of Solana from a public company. But it also gives investors more opportunities. And there might even be a kind of a cross-pollination thing going on. I personally know a lot of my buddies trade Metaplanet in Japan just because, they like the volatility there or what's going on. So you might see, heck, maybe you have some US investors that, trade the Korean vehicle or trade one of these other vehicles. So that's what we're really excited about for the international side. And in these arrangements, these kind of franchising arrangements, we take an ongoing, management type fee. We also get a lot of upside via, not just the investment, but also, additional upside, whether that's, warrants or shares or that kind of thing. So we think it's a pretty valuable opportunity for DFDV shareholders and DFDV, US or the mothership, if you will, because of this upside potential and the kind of ongoing fee revenue from that. So exciting monetization opportunity for us. We haven't really gotten one, off the ground in a big way yet. We kind of started on a few. So excited to kind of see where this takes us. The other area that we're expanding on is for non-Solana tokens in the US. So we announced the ZeroStack partnership there, sort of franchising arrangement, but where we, made an investment, but then also we have a lot of economics on the back end for helping them get their thing off the ground. And so, we will primarily be spending time here on kind of Solana ecosystem type tokens. Selectively, we may go outside the Solana ecosystem, and then maybe longer term, we expand even more. But for now, we're primarily going to be Solana ecosystem focused. So tokens, on the Solana network. And so those are kind of the two areas: the international expansion for Sol specific vehicles, and then the other tokens in the US. Those are kind of the two areas that we're focused on with Treasury Accelerator. And we're very excited about continuing to build there and, starting to realize some, real economic profits and benefits there.
Cool. Yeah. I just want to drive home one point in particular. We personally internally at DFDV, we don't view doing these deals as kind of cannibalizing demand for DATs such as DFDV. This is very much, us taking advantage of our own strengths and experiences to generate, more revenue to grow sold per share. So, we talk about that and we detail, everything and more on the Treasury Accelerator front, excuse me, in a most recent playback that we've got on our YouTube. It's entitled DFDV Deal Making, an update on Treasury Accelerator initiatives. It's about 40 minutes. It was myself and Parker. Highly suggest anyone who's interested in learning a little bit more as to what's been going on in that front to head on over to YouTube, our DeFi Dev Corp channel and check it out.
Yeah, and I think you make a great point, Pete. Like the idea here, obviously the benefit of or the one of the powerful things about a DAT is being able to sell shares into the market at a premium to NAV, and so you're able to accretively grow SOL per share. But the best possible thing that you can do is grow SOL per share without selling shares at all, right? Infinite premium to NAV, if you will, raising. And so this is a way that we can leverage our expertise, our strengths, our brands, all the things that we've done to date to essentially generate free cash flow into the business that we can use to buy SOL that has nothing to do with selling shares into the market. And so we think this is a pretty interesting way to generate SOL per share growth that doesn't involve raising capital and should allow us to, if we're successful here, grow SOL per share, even in, let's say there's a prolonged environment where NAVs are at 1 and we can't really, run the ATM to raise capital. We can still grow SOL per share via, things like Treasury Accelerator here.
Awesome. Yeah, thanks for that additional color. Cool. Shifting gears. Got a question from community member. Any info you can share about a potential Series C preferred? Timing, size, yield? Joseph, what do we want to tell them?
Sure. Well, yeah, thanks. That's a good one. So yeah, we're pretty excited about the preferred offering. So we filed an S1. I think it's 2 weeks ago now. Anyway, you can look it up. All this stuff's public, and it's got a sample, like a term sheet in the filing on what the preferred would be, but all the numbers are blank while we wait for SEC review. And the preferred offering looks a lot like Strike, STRK. The MicroStrategy is convertible perpetual preferred. And we'll get kind of feedback from the market and work with the bankers after or as the S1 approval process continues, and we'll eventually price the preferred. We don't know what the pricing will be because we have to take it out to market and get feedback. That's how these kind of work. But it will be well, if it continues along with the current term sheet, it would be a dividend paying preferred instrument that would pay dividends monthly. And it would be convertible into DFDV common stock at some particular strike price. But the strike and the dividend payments, like the coupon essentially, and the price on the like initial launch of the preferred stock will all be determined through kind of discussions with investors and bankers after the S1 review process, or as the S1 review finishes. And this is really cool, I think, because it lets us grow SOL per share without issuing more common stock, at least until the conversion to common. But the strike on the convert can be much higher than the current market price of the stock. And I don't know, I doubt that we get terms like this, but I think MicroStrategy was, when they launched Strike, it was over 3 times the current market price of the stock. Like the strike on the preferred to convert into common was over 3 times the price of the common at the time when they launched the preferred.
Yeah, really, really cool and exciting. Obviously, it's a bit of a process, but nonetheless, it's chugging along. I'm personally excited. I would say that that's probably one of the things that I'm most excited for heading into October/fourth quarter. Of course, I'm going to ask both of you guys, what are you most looking forward to in the month and quarter ahead? So keep that in the back of your mind. But before we get to that, we'll move along to another question we got as it relates to staking yield and dilution. Can you update us on the total yield from Stake Sol after the recent acquisitions? Also, why is the fully diluted share count 31.5 million when reported shares are 25 million?
Yeah, I can jump in on this one. So on the staking yield, we haven't really shared too much about like an ongoing forward projection on staking yields specifically. I mean, you can look up on all the staking websites to see what that is generally, but we also do some of the on-chain DeFi stuff. So, with our partnerships with Camino and Drift and Exponent and Fragmetrics with DFDV Sol, our LST, and most recently our announcement with Gauntlet. There's a Drift Vault now using DFDV Sol as the collateral asset, running the JLP hedge trade, the basis trade there. So all in on our treasury, including the third-party delegation that we get, this DeFi on-chain activity, some of the other things, we think we can hit about a 10% native or organic yield on the treasury. So what that would mean is over the next year, let's say we had 2 million SOL on the balance sheet. Over the next 12 months, we think we could grow it by 200,000 SOL without ever raising capital. Now that's a rough target. Maybe it comes in at 9 or sometimes it's a little higher, and we'll kind of adjust that. But that's what we've been able to do historically. And that's kind of, again, all in blended, not just from the staking specifically, but from, these other sources of return on asset, essentially. Now that 10% does not include any of the Treasury accelerator profits or returns. We've not booked any of those yet. And, have not, it's a little bit too early to make projections based on that. But, that's kind of where we're at right now.
We also are
terms of-
always looking for ways to grow the yield and are evaluating kind of opportunities daily to deploy the assets elsewhere in DeFi or ways to juice the staking yield, etc. I mean, still like a everyday conversation.
Yeah, good point. On the second question about the shares, so those warrants are not, they haven't been fully exercised yet. And so rather than adjusting the metric to include the pre-funded warrants, and then, historically we just kind of left it at it as is. Hey, this is the number of shares counted on the website, that the SEC has and that's registered, just to be consistent. However, on our NAV tab, we do show the fully diluted number. And for anybody's calculations at home, you might want to add in the prepaid warrants to, get at the kind of, I wouldn't say fully diluted number, but maybe a little more realistic SOL per share and NAV multiple. So that's what we kind of do internally. But rather than flip-flopping the definition, frequently for SOL per share and MNAV based on, a current raise or whatever, we just wanted to keep it really consistent so that people kind of know what to expect. But again, we've got that NAV tab that shows some other views on it.
Yeah, and we've, if I recall correctly, we've been pretty transparent, making note of that, explaining the discrepancy, talking about the prepaid warrants on the press releases anytime we've announced, acquisition of SOL. So seems like, I think we've done a pretty good job of explaining to the market, but glad we got that question from a community member. Parker, just real quick, you hit on it earlier, and I didn't mention it when we started this off, but do you want to just quickly highlight the Gauntlet vault and what it means and why it's important to us?
Yeah. So I'm sure many of you know the Gauntlet name. They're one of the leaders when it comes to these on-chain vaults, on-chain yield strategies. And so, as we search for yield, appropriate risk yield, right? We're not becoming degen traders with our Sol balance sheet, like we're, still long Sol. But as we can find kind of Sol denominated yield enhancements, obviously we want to take them, but we don't want to do that. That's not the exclusive goal of what we're doing here. We're also trying to amplify all the ways that investors can grow their holdings on chain themselves. So, partnering with Gauntlet, helping to amplify Gauntlet, and ultimately showing, hey, look, public companies can utilize these strategies on chain. Our hope is that other public companies say, you know what, we're going to peel off a little bit of our, maybe they don't have Sol, maybe it's a random software company or something, but maybe they've got cash on their balance sheet and they say, hey, look, we want to put that cash to work in Solana because it yields more than, holding treasuries or money markets or what have you. And so, look, DFDV, public company, they've paved the way. They've shown that it's okay to allocate balance sheet on chain to some of these strategies. And so our hope is that we can help kind of pave the way and provide some reputational cover, if you will, for random corporate treasurers all over the world to allocate portions of their balance sheet in whatever asset they have to the on-chain world. I mean, that's how we grow Solana DeFi, is by getting more dollars in, more Sol in, more BTC in, more all of the assets on chain. And so if we can help pioneer that, that's a big part of what we're trying to do. So yes, the return is nice and it's exciting, and we put some capital to work with Gauntlet in that vault. But I think maybe equally as important is that partnership. So we're really excited about it, and we're going to keep doing other partnerships like it.
Yeah, just to echo that, I think it's a big win for us. I think it's very much part of DFDV's emphasis on, pushing the limits of on-chain corporate innovation. And as someone who actually I was at Gauntlet before Parker and Joseph finally said, stop begging for a job, we'll bring you on. I spent a brief time there. It's a solid group of folks, incredibly working, very forward focused visionaries. It's great to be part of a partnership with them and work alongside them and grow alongside them. So I'm really excited, and yeah, it's cool to be pushing the limits of on-chain corporate innovation, as I like to call it. But cool, thanks for hitting on the Gauntlet Vault. Just shifting gears, as I mentioned earlier, there was one kind of standout last month, namely our board authorized a $100 million share repurchase program. And so one of the questions we got from community member was, when will the 100 million buyback begin and how will it be financed? Who wants that one?
Yeah, I guess I can take it and we can go together on it. So, when will it begin? We don't know yet. Depends on market conditions when we think it's like accretive enough to buy back. Likely the only time that we would do a buyback is if the stock's at a like not at a premium, trading below 1x. The more it trades below 1x MNAV, the more accretive a buyback becomes. It would be financed with cash. I do not want to sell Sol to run a buyback, because I think that that's like a death spiral scenario. I've said this in other interviews, where if like the market thinks that the management team is doing a bad job, or whatever reason the treasury company trades consistently below NAV, then running a buyback for 1 day or 1 week or whatever to bring the stock back up to 1x is not the solution, because then the market, nothing changed in the market, right? The market still has the same perception about the management team or whatever the issue was with the company, right? So I think that that's like a kind of a death spiral scenario. So I think much better approach is just to use cash. So for example, if we do one of these Treasury accelerator deals and we make, I don't know, $20 million on one of these deals, then we say, oh, we're in a bear market, market's down, whatever. All the DATs are trading below 1. We could buy Sol, or we could buy back our own stock. Buying back our own stock in this situation could be akin to like buying Sol at a deeper discount. So let's deploy some or all of that cash that we raised from this other deal into a buyback. I think it would be, a scenario along those lines where actually running the buyback makes sense. Also, we have to be thoughtful about when we can run the buyback, because there are rules about fundraising and running a buyback program. Like you can't do them, one day and then the next day kind of situation. So we'd want to carefully consider that as well. And lastly, the company already had a buyback program in place, and what the board's done is expand the scope of it and like delegate to management the choice or decision on when to run it. Anything anybody wants to add there?
Yeah, I guess I'd highlight, as part of the Treasury Accelerator, getting these ongoing kind of asset management fees paid in cash. This is kind of a constant stream of income coming in that we could use to deploy into the buyback on a selective basis, as Joseph highlighted.
Cool. Thanks for that. We'll move on to the next one here. I guess before asking this, I'll preface and say the DAT space has seen MNAV compressions across the board. Some have been hit harder than others. I think a lot of people are sitting here saying, like, what's the deal? You're seeing, for example, Bitcoin and Ethereum and Solana go up, but the DATs aren't tracking at the same rates. I think some people are getting antsy, a little nervous. So, hence why I'm not surprised we got this question. Why is DFDV price trading below MNAV versus peers? And then why isn't Sol price tracking closer? I think there's a lot to unpack there. Which one of you guys wants to go first?
I could jump in. I do wish DK, our now Chief Strategy Officer, was here, but he's fun story. Unfortunately, he's on a plane coming back from Singapore, sitting right next to Tom Lee. I kid you not. So that's just totally random happenstance, but pretty funny there. So he's got a lot of thoughts on this, but he's been a trader for a long time. But from my perspective, if you look out at the market, the top 4 MNAV in a lot of cases started in July for a lot of these names. MicroStrategy's MNAV top actually happened back in November. But you've seen the compressions kind of across the board. MicroStrategy's down to, by some measures, 1.3, 1.4x. MetaPlanet, by some measures, is down to like 1.2. And so, I did a long tweet thread. So if you want to, if you have some time, it's a little bit long. If you want to read it, you can go check that out. But I think really what's going on here is, a lot of DATs have come to market. There's multiple DATs on each asset. I asked ChatGPT, and I think there's probably something like north of 200 companies, public companies, that have crypto on their balance sheet, which is pretty wild. Most of that's Bitcoin, but lots in other assets too. And so I think there's a lot of options if you want even like Solana exposure. From the DApp perspective, there's a lot of options out there. And so, differentiation takes some time. It takes harping on the differentiation over and over and over again. I'm sure many of you guys here see the differentiation that we think we have at DFDV, but the general market, the tens of thousands of traders out there maybe don't all see it, right? They're casual. They see a tweet here or there, a headline here or there. They don't really know how to differentiate between the, 6 sold dats or something out there. And so with that, what ends up happening is I think a lot of things just trade roughly in line with each other until that narrative comes out. And so this is something that we're hyper focused on, is really hammering home the narrative of why we think we're, the leading sold dat and maybe the leading dat of, across all the assets. But, it takes some time to really get that narrative out there. And I mean, heck, you look at what Michael Saylor did with MicroStrategy, and it took years for him to get the story out there. And he traded at a discount to NAV in the last bear market for, a number of months, and otherwise was trading close to one, just slightly above it for pretty much the whole bear market. So it's going to take time to really tell the story, to really get the story out here. Would really appreciate help from the community here to get that message out. We love the feedback on, hey, you guys should harp on this more, or you should tweak the messaging here. We love all that feedback, super helpful. But I think it's a narrative thing, telling that story. In terms of why some of the newer DATs are maybe trading at a higher NAV multiple, you always got to look at the unlocks, unfortunately. And this is kind of a low float, high FDV game where if, they did a pipe and they sold 100x or 10x or whatever the current number of shares. So if the company had, I'm making up numbers, 10 million shares outstanding and they sold 100 million shares, if those shares are not in the float, if they've not been registered yet, watch out, right? I mean, if you look at a lot of the names that had unlocks back earlier this summer, sold dats and, non-sold dats, there's a couple famous ones. Just go look at the charts, and these things fell off. They had a massive cliff. So I can't say which ones are going to have that, and some might not. But like, you got to look at the shares and how many are in the float versus actually sold. And I think once all these shares get registered, you'll probably see a reversion to the mean until certain DATs can really tell that story on why they're different. And that's kind of what we're focused on, is telling that story on why we are different. Joseph, anything you want to add to that?
No, I think you covered it. Yeah.
I don't know, Joseph, where you are, but you sound like Darth Vader. So you've moved from Solana Jesus to Solana Vader.
Oh, interesting. Let me see if I can fix it. Thank you.
Kind of Solana Vader goes hard. I actually like that. Man,
Yeah.
if Joseph doesn't want that title, maybe I'll put it in an application. I don't know what I got to do, but it's cool.
Is this better?
No.
Jeez.
You just sound like you're closer. You sound like you're closer to slicing me up, but that's not the end of the world. I guess I know we're coming up on time. We want to keep these relatively short and sweet. I guess one of the other questions before we go into quick rapid fire set of questions is, on the competitor front, there was a number of different competitors that came to market in September. Just kind of curious, any general thoughts about that? Has the DFD strategy changed at all? Where do we see all of this headed?
Yeah, it's a good question. Well, I think plagiarism or being copied is the sincerest form of flattery, right? Flattery. And I think look, for the months of April and May. I'm not supposed to talk too much about stock performance, but this is just a fact. For the months of April and May, we were the #1 performing stock on the entire NASDAQ of any stock. And so I think a lot of folks saw that and were like, hey, like, we can do this. Like, we can find a small company and convince them to buy some SOL on the balance sheet and, kind of run the playbook. Doesn't seem too hard. But, as we've been doing this, we've been doing this for eons now, since April, not really that long, but we've learned a lot along the way. And there's actually quite a bit to doing this well. I mean, anybody can, take over a company and, get some assets on the balance sheet, and that's great. But building an operating business around that asset to grow it organically is much more challenging. And so I think, it's great that there's a bunch of other players in the space. They're all buying SOL. That's awesome. But I think what these management teams, and in many cases, they don't actually have management teams yet. It's, just a board member or two. But in many cases, well, we think these management teams are going to, as they get into it, realize a lot more difficult to generate, return on assets than just buying the asset and holding it. Our playbook has never just been buy the asset and stick it on the balance sheet, trying to copy MicroStrategy. It's really been to evolve that playbook because Solana is a productive asset. And we've talked about this over and over and over again. And so to the extent that we can use the asset productively to generate free cash flow and returns to shareholders, that's what we're here to do. And we think ultimately the management teams will be the key differentiator. Anybody can buy a pot of Solana, but what you do with it is the differentiator. Just like in any other business, you can go out and buy a bunch of big Mac trucks, or you can buy a bunch of GPUs or Bitcoin miners or any other asset under the sun. But it's up to the management team to use that asset as productively as possible. And management teams that don't know what they're doing are not going to utilize it productively, and therefore the market will punish them. So it's great that we've got a lot of copycats. I think it's great for the ecosystem. It certainly helps support the price of Solana and other assets. But we think that the winners here will be determined by the management teams and their ability to organically grow their asset base and ultimately deliver value to shareholders. So that's what we're here for. And as large shareholders ourselves, we're trying to deliver value for ourselves, which actually we think is a somewhat of a unique differentiator. But it's a big focus for us. Pete, anything you want to add to that? I think Joseph has been moved to a listener now.
Oh, yeah, I don't know why that happened. I just added him back as a speaker. No, I mean, like, look, I think I'm personally, and I'm pretty sure everyone on the team views it this way. I'm personally like a big fan of competition. Without competition, you're not probably performing your best. And so for us, we've seen some of these DATs come to market. We saw some of these DATs kind of coming to market, and so now that they're here, we're seeing their strategy. We're executing on ours. It's causing us to be on our toes and continue to think about new creative ways to drive SPS growth. And so, not worried about it. We're not, of course, going to just, kick our feet up by any means. But, I think we've got strong conviction that we're the best operator in the space. And, we've got confidence in our ability to continue to execute going forward and, bring on the competition. Joseph, I think you're able to speak now. Do you have anything you want to add on the competitor front?
Yeah, I'm sure you guys. Do I sound okay now?
No, but it's fine. We can hear you.
Yeah, sorry. I don't know what's up. I think these guys said almost all of it. Yeah, big thing is these other companies are going to just accumulate SOL, which is great. Good for all of us. Good for the ecosystem.
Cool. Well, so just two more quick questions here before we wrap up. I asked you guys kind of earlier in the conversation, but what are you most excited about in the month and or quarter ahead?
The preferred. Yeah, I'm
That's
the
an
most
easy
most
way.
excited. Yeah, that one's an easy for me. I think I was also most excited about filing the S1 for it and the prep work for it, and I'm excited about when we actually launch it, whenever that is. Um, yeah, hope it works out great, but I'm really excited about that. And preferreds beyond this one, so this one's, I don't know, like MicroStrategy vanilla, I'd say. But what's possible with these instruments is very broad, and I'm excited to see kind of the like crypto TradFi crossover and the kind of financial innovation that can get built via these instruments in the future.
Yeah, I'd say for me is Treasury Accelerator. Hopefully getting a couple of these launched and out there and trading and everything. I guess these priorities reflect what we've been personally working on internally, but I'm also very excited about the preferred. But my top one is probably some of these foreign Treasury Accelerator vehicles.
Awesome. And then last but not least, any personal favorite highlight for September? I think you guys might have all done some traveling. I don't know if there was a conference. I think actually DK has probably been the conference lead. But yeah, what stood out in September? What had you most hyped?
This wasn't exactly September. It was at the very end of August, but the NASDAQ bell ring was super cool. And hopefully we can do that again and invite many of you here out to it.
Yeah, it was a great time.
Cool. Good deal. Awesome. Well, that concludes it. I know it was about for 45 minutes. So I know we also didn't have a chance to get to all the questions, but of course, everyone, please keep them coming. You know, you can send them directly via email or of course, comment on Twitter. We'll do our best to get to them. Yeah, with that said, thanks everyone for joining today and sending in your thoughtful questions. We're just getting started here. We're really looking forward to updating you guys in October and, of course, finishing out the year strong now that fourth quarter is upon us. Please don't hesitate to keep sending feedback our way, and we'll keep pushing forward on it. So, with that said, in service of SOL per share growth, this is Pete and team signing out. Thanks, everyone.
See y'all. Bye.